In this video, we're going head to head. The biggest market in the world, the US, with the S&P 500, and a little bit of a smaller one over here in the UK with the FTSE 100. Which market's best for your money? What's the pros? What's the cons? We're going to break things down bit by bit, and hopefully by the end of the video, you'll be in a better position to understand where you can invest your money and learn with me along the way. Firstly, let's have a look at some of the sizes of these markets. The US market is the biggest in the world. The valuation of all the companies combined is over $35 trillion. Just a little bit more than I've got in my bank account at the moment. To put that into perspective, the UK market is just a measly 1.6 trillion. Okay, so apart from Apple, who else is on the S&P 500? Well, no surprise, it's the big tech companies. It's your Microsofts, your Amazon, your Facebook, and also Alphabet, the owners of Google. And then all the other companies that make up that constituent. As you can see, the US stock market, at least at the top, is concentrated really heavily on technology. And over the past few years, especially the year we had last year, that has changed things massively. These companies have grown hugely, way past the average, way past anything we ever expected to see. Lots of people are saying this market might even be overvalued, but I haven't quite got a crystal ball just yet. Maybe we'll talk about that later on. Now, on the other hand, closer to home, let's look at the FTSE 100. We've got a market cap here of 1.5, 1.6 trillion. Nothing to be sniffed at. Puts us around the 8th in the world, behind the likes of Hong Kong, China, Japan, etc. And of course, the United States. The top constituents though, that's where things start getting a little bit different. So now let's look at some of the bigger companies in the FTSE 100. Okay, those are like Unilever, AstraZeneca, Rio Tinto, and HSBC. A very different dynamic from the US market, which is heavily tech dominated, whereas on the UK market, we've got a bit of a mix of the old guys, the pharmaceuticals, the consumer good companies, banking, mining, etc., which over the past few years have taken a substantial hit, especially when we look back at 2020. However, on the flip side, let's start talking about some of the pros and cons of these different markets. Overall, the S&P 500 tends to be better at growth, whereas the FTSE 100 tends to be better at paying a dividend. A dividend is when you essentially get free money for holding stock in a company, and you'll get a little bit of those profits back every quarter or every year. Now let's look at some of the averages that we've seen across the FTSE 100 and the S&P 500. Approximately, the S&P 500 across all of those stocks will pay you a dividend of about 1.5% each year. That compares not very well to the FTSE 100. The FTSE 100 will give you a whopping 4.7% for your money. However, that sounds good, and while you'll be getting money in your pocket every quarter and every year, the growth from the S&P 500 will stomp all of those dividends into the ground. Just looking at over the last 10 years, the S&P 500 has averaged over 12% return every year. That's unbelievable. So even if you take your really nice 4.7% dividend from the UK market and compare that against your 12% you're getting from the US, you're still better off investing in the S&P 500 right now. However, let's look at some of the fundamentals. Right now, we've seen a crazy market ride over the last couple of years. Is the S&P 500 overvalued? Is the FTSE 100 full of bargains to grab now at a cheap price and hold them for the next 10, 15 years? Who knows? Again, if you've got a crystal ball, let me know in the comment section down below. Again, if we look at some of the fundamentals, price to earnings ratio, the S&P 500 sits around the 22 mark, whereas the FTSE sits all the way down at 14. What does this mean? Well, that's up to you. Well, potentially, it could mean that the FTSE 100 has got lots of bargains ready there for you. It's taken a huge hit over the past couple of years, and certainly some of the old sectors like mining, oil and gas, etc., and consumer goods has seen a massive decline with a bit of a bounce back. Now, as the world opens itself back up again, we're still going to need lots of oil. We're still going to need lots of those consumer goods for people to spend their new money on. Let me know some of your tips and thoughts in the comment section below. I'd love to work out where you're investing your money right now. Are you putting more in the US market, in the tech sector? Or are you thinking some of those old companies on the UK stock market might see a resurgence over the next few years? And how long are you going to hold them for? Okay, you've made it this far. You've put $10,000 into the US stock market and you've had it in there for the last 10 years. What does your growth look like right now? If you'd put just 10,000 US dollars into the US stock market 10 years ago, that investment today would be worth around $32,000. That is a huge increase on your earnings. On the flip side, if you'd put that money into the FTSE 100, your $10,000 would be worth just $12,180. However, it's not taking into account all of the dividends we could have got paid, but still, that growth outstrips all of the dividends we would have earned in that time. However, does that mean that we're going to experience the same in the next 10 years? Is the S&P 500 going to rocket away to the moon? Who knows? So which one's best? Okay, the US market, it's much bigger. It's got all these big household names, all these big tech companies on, which are just going to keep growing and growing and growing. However, how do we make the most of our money, make the most of our hard-earned investment and decide where we put it? Well, luckily with investing, we don't have to stick to our native home market. I can invest in any US company I like and have no money in the UK stock market. Alternatively, I can spread my bets and put them on whichever companies I like. I can even combine my money into a fund. I could invest in a fund which has stocks from all over the world. That might even be a better way to go. Let me know what your thoughts are on this. I'd love to hear some of your comments below and how you balance the UK and US stock market, especially if you're a UK citizen or a US citizen. Do you want to invest across the pond like we want to invest across the pond as well? One more thing to consider is think about what you earn. Do you earn in pounds here in the UK, or are you earning in dollars in the US? Are you spending those hard-earned dollars on the UK stock market, or are you taking your UK pounds and investing it in the US market? You've got to think about that conversion rate and what happens with the exchange rate. If you're a UK guy and you invest all of your money into the US stock market and get that lovely 10-12% growth every single year, and then you want to convert it back into pounds, well, what if the dollar has got significantly weaker against the pound? There's some big risk there. So definitely worth considering this before you invest all of your money one way. Another thing to consider is, where are you on your investment journey? Are you having a bit of a midlife crisis and looking to get money for that first Porsche? Or are you looking to get money to save up for your first house? Are you looking to grow as much money as possible during your 20s and 30s so you can give up work in your 40s and 50s? Or are you already at retirement age and you've got a big pot of money and you need to work out how you can best pay your bills and have some enjoyable holidays while you're at it too? So you've always got to balance that income through dividend investing versus the growth you can have in some of these other stocks, and balance out that to what your needs and requirements are. As we've seen over the last year, things can get a bit crazy, and during that time, your bills don't go away. You still want that stability of income. However, on the flip side, potentially you can do a bit of hacking here. Why not invest everything in the growth stock sector and sell everything that you need each year? If you sell the growth you get each year, you could almost pay your own dividend. However, not as predictable, but certainly something worth considering. You'll be surprised how much money you could make from growth investing versus dividend investing, but selling at the right points for you when you need to. One final point, and again talking about all of these exchange rate issues, why not just invest yourself into a fund which covers both of these markets? Probably the most sensible thing to do, so you've got a finger in all the different pies. You've got some Facebook, you've got some Amazon, but you've also got some AstraZeneca and some Rio Tinto. Have a mix of everything. Why not? Protect yourself, diversify your portfolio. Or alternatively, if you're categorically insane, just YOLO everything into a random cryptocurrency that you found online. Probably wouldn't recommend the last one, but hey. Okay, so a quick summary of these two markets. The UK market, full of some of the older companies, more traditional industries. The US market, the biggest in the world, full more of the tech sector. what do we think is going to grow in the next 5 to 10 years? Nobody will know. We can only make some solid guesses here. Nothing that happened in the past can predict the future, as they always say. My personal philosophy is, at my age, I'm heavily invested in growth. Main priority from me is growing my investments as much as possible, using lovely compound interest year after year after year. And even though some years are going to be difficult, is to consistently invest month after month, year after year, and see some positive returns. And then, who knows, once I'm retired, maybe I'll diversify my portfolio a bit further and then start getting those sweet dividends coming in every month or quarter. So I know that I can survive, lay on a beach somewhere, take a few cruises, buy that new bag of golf clubs, and maybe buy that Porsche I've always wanted. Thanks for sticking around to the end. This has been one of my first videos. Let me know if the audio is good, if you like the video. I'd really love to hear your thoughts in the comment section below. I want to know what you're investing in, if there's a cool new fund which has just come out. Tell me some of the hottest tips of companies that you're investing right now. Tell me if you're young, tell me if you're old. Tell me about the strategies that you're going to use moving forward. I'd love to hear from you. And please, if you've enjoyed the video, hit that like button for me and subscribe to my channel as we grow this over the next few years. Thanks again. See you on the next one.